Namaste. As I always keep saying that every stock trader keeps thinking about how to trade, what kind of trading to do, what kind of trading can give you more benefits. So when people keep thinking in these lines, I always keep saying that it is a matter of just one trade. One trade can change your complete trading journey altogether. Alright. So in order to explain this in detail, in my previous video, I had taken an example of a stock called HAL. And in HAL, what kind of trade opportunity did we get? And through our dynamic system software, how did it make our job easy? How did it guide a trader? And based on the dynamic system, how one could have traded, what kind of benefits one could have made. These are the details that I had explained in my previous video. But when I was explaining regarding this trade in HAL, I explained it through futures trading. I mean, if you had done this trade in futures, what kind of benefit you would have got? This is what I had explained in the previous video. Now, having watched that video, now many of you may have a question in your mind. Does this happen only in futures, or can it also be done in options trading? Alright. So when people had this question, some of them had asked me these questions. Is it possible even to do it in options? I said yes, why not? Even in options you can do similar trading. Even in options, one trade can change your complete trading journey altogether. Alright. But then when it comes to trading in options, many traders or most of the traders have a, they always think about the issue in their mind. And the issue is, when you're trading in options, there is always this fear of the premium melting. Alright. The time decay or theta decay, you name it, there are so many things people are scared about trading in options. Alright. So the more I try to explain things that this is not the way, it should be the other way, people don't get convinced at all. This is one surprising thing that I have come across. But still, today I am here to give you some absolute clarity when it comes to trading in options. Alright. In order to explain this clearly, here I am taking an example of Tata Steel. Okay. Now this is a stock I am picking, and let us see the price movement of Tata Steel. How dynamic system identified an opportunity for us in Tata Steel. How did it guide us in order to do a trade in Tata Steel? If we had done this trade in options, what kind of benefit we could have seen, or what really happened, or as you think, did all your fears come true? Did the premium become zero? Let us have a look at this. It so happened that on 6th of May 2025, as the price of this Tata Steel kept on increasing, in our dynamic system, long trend, there is one feature called long trend, it confirmed a buying opportunity. Alright. Now, the moment it confirmed a buying opportunity, obviously we are going to come look at this report or see that it has given a buy on 6th of May evening, not during the market hours. In the evening, after you finish all your job, freshen up, come and look at this dynamic system, and you saw that there is a Tata Steel which has given a new buying opportunity. Now you cannot buy it in the evening, so your plan is to buy the next day morning as soon as the market opens. So next day morning, that is on 7th of May opening, if you had bought it, the price was available at around 142 rupees. Alright, 142 rupees was the price of this particular stock. Now before we buy this, just because it gave a buy, we blindly don't jump into buying each and every script that we get such opportunities. Before we buy this, now we always go through the detail trying to understand, why should I buy this? It has given a buy signal, I understand, but then what more is there in this? What is the strong reason or conviction behind doing this trade? Alright. Now for us to understand this, I always keep saying, just let us try to understand what is happening in this, let us try to understand what is happening in the price of this particular stock. From where is it coming up? What is the pressure? Which direction is the pressure? Once you understand this, the decision making becomes absolutely easy. So when we started looking at it, we saw that the price of the stock was actually coming down. Before it came down, somewhere at around 21st of March 2025, in dynamic system, those people who want to do long-term investment, for those people, it had given a fresh buying opportunity on 21st of March for a long-term buying opportunity. Now, as I told you, before we buy, we first check whether it is a clear buying opportunity. Is there any other hurdle in between? when it gave us a buy. So at that point there was a hurdle, there was another major signal at the top. So the price did not go up, we wouldn't have bought it at that particular point. So the price started coming down. So as it started coming down and made a low of 125 rupees. Alright, and this was on 11th of April 2025, and when it was making a low, that is a point where there was a dynamic major signal. There came a dynamic major signal. Price touched the dynamic major signal. The moment the price reached the dynamic major signal, we knew that this is the point where it can start reversing. Alright, initially when it gave a buy, we did not buy because it was not a clear opportunity. So it is now giving us a better price to buy. Alright, so those who were planning to buy it for a long term, they would have bought it here. Especially our dynamic members would have done this. Alright, but anyways, from that particular point, from a dynamic major signal, the price started reversing. We know that if it starts reversing from a dynamic major signal, the move will also be bigger. Alright, so in this during this reversal, on the way, on 6th of May, the long trend confirmed a buy. Alright, it said that it is likely to go up further. Now that it is coming up from a dynamic major signal, the pressure is upward. When the pressure is upward, the trend is also, the long term trend is also in buy. Alright, the pressure is also upward. Along with that, we are getting a fresh buying opportunity. There is absolutely nothing to think here. Just go ahead and buy it. Now when I say this, some of you are definitely thinking that how will you know that Tata Steel is the stock which has given a trading opportunity. There are so many thousands of stocks in NSE. Alright. So how do we know that I have to pick Tata Steel alone? Alright. Why not pick some other script? How will I decide this? Well, you don't have to sit and do any research analysis to come to a conclusion on how to decide this. There is a very simple process. There is an easy solution for this. In dynamic system, there is a facility called new buy sell dynamic report. Alright. Now this report, every day evening when you open this report, it checks all the stocks under this dynamic system and finally gives you a list of stocks where there has been a new buying opportunity or new selling opportunity. It gives you a list. Now when you are going through the list, Tata Steel was also one of the stock in the list on 6th of May. Now obviously along with Tata Steel, there were so many other stocks also. But then maybe if you are looking at F&O stocks, out of the entire list, maybe you would have filtered it down to few stocks. Now all the F&O stocks, each one of the stocks one by one when you kept on checking. Now Tata Steel was one such a golden opportunity which you are not supposed to miss. Maybe along with Tata Steel there was also another stock where it was a good trade opportunity. You could have traded that also, absolutely no problem at all. Alright. But then Tata Steel is one such company. When you look at such a name in the list, definitely your focus will, your heads will turn towards that particular stock. Such is the stock. Now, having known all these things, since the buy opportunity came, we would have bought it at around 142. And from there what happened is the price just kept on increasing. Absolutely no looking back, it just kept on increasing. By 26th of May, it already made a high of 165. And on 29th of May, why 29th of May? Because if you are trading in futures, let us assume, or options, that is the expiry date, 29th of May. Alright, the price at 142, the buying price that I told you, that is the cash segment price. When the buy opportunity came, the price was at 142 in the cash segment. At the same time, if you wanted to buy it in futures, whatever price is available in futures, just go ahead and buy it. Absolutely nothing to think there. Now, having bought it, now by 29th of May, since the expiry date is there, now the price closed at around 163 range. By 30th of May, it closed at around 161. Now obviously if anyone has done this trade in futures, on expiry date you could have exited and rolled it over to the next contract. I am aware that in stock futures and options, when you are trading before the last 2 days of expiry, during the last 2 days of expiry, the margin requirements are going to be very high. So what you can do is 2 days before expiry, you can roll over to the next contract. Absolutely no problem at all. Alright, that is what you are supposed to do. But anyways, from 142 to 161, We are talking about literally 18 points movement that has been captured in a single trade. We didn't have to do anything. It gave us a buy opportunity. We bought it every day evening. You come and check let us see what it is telling us to do for the next day. That is all that you are supposed to do. During the market hours, you don't have to sit and watch the market movement throughout the day. If you do that, if you are sitting in front of the trading terminal, then I'm really sorry for you. It is impossible for you to see these kind of benefits. Now, if anyone had done this trade in futures we are talking about a lot size of 5,500. All right, a margin requirement of almost 1,79,000 rupees. And if you have captured 18 points or more than 18 points movement in a single trade, now this trade would have fetched us very easily almost 1,03,000 change profit in a single lot, in a single trade. All right, and the trade is still on. It has still not given us an exit. Well, whenever it is going to give us an exit, we are going to exit. There is absolutely no doubt in it. Maybe my profit may be more by the time I get an exit, or my profit would have reduced a bit by the time I get an exit. But then this trade is a handsome profit, cool profit, absolutely without any tension and stress. One could have made this kind of this kind of profit. We are talking about 1,79,000 rupees margin investment and 1,03,000 rupees profit. It is literally close to 57% or more profit on your investment in this particular trade. But the big question here is, we were supposed to discuss on options trading. All right. The moment I talk about options trading, some of you watching this video, you may start thinking, all right, he's going to show us some in the money strike price, because in the money strike price is the one that gives you profit. This is a belief many people have. Some people say that no, it is always better to stick to ATM strike price, no tension. And there are those who say that if you go trade in OTM strike price, absolutely take it in writing, the premium is going to become zero. All right, it is already a predefined mindset many people have about options trading. Okay, obviously you are absolutely right. OTM and ATM strike price on expiry date is going to become zero. There is absolutely no doubt in it. All right, but then what is your entry point? Where did you enter? Where did you exit? That is the key. So today what I am going to do here is I am going to show you all three different categories, that is ATM, ITM and OTM strike price. Let us see which strike price really gave us profit, which is the strike price which took the premium to zero. So I'll start with the ITM strike price. The day when it gave us a buying opportunity on 7th May, if we had bought this call option, obviously we have to buy a call option. So 142 change was the price running at that point in time. So if I had gone a bit ITM, I am talking about a 140 strike price. All right, 140 strike price on 7th of May at the opening. It was available at 7 rupee 40 paise. This was the premium available. Maybe some of you may have got it lesser than that if you waited for a few minutes, or maybe a bit more than that also. I don't argue on this. Now 7 rupee 40 paise, if that is the premium per lot, your investment is somewhere above 40,000 rupees in this particular trade. And from there what happened? The price kept on increasing. It went up to a high of almost 25 rupees premium, and on expiry date, that is on 29th of May, the premium closed at around 23 rupees. All right. Now in this particular trade we are talking about more than 15 points benefit. That is roughly around 86,000 rupees profit on this particular trade. On an investment of 40,000 plus, you are getting 80,000 plus benefit. We are talking about more than 200% returns in this particular investment, in this particular trade. All right, ITM strike price. The same trade if I had done it in a ATM strike price. Now when the price is at 142.20, if I go look at a ATM strike price, the strike price available is 142.5. But then we wouldn't have selected this particular strike price, because when you're trading in options, selecting the right strike price is very, very important. And especially if you're trading in stock options, it is the most important thing, selecting the right strike price. So we went for 145. All right. So 145 strike price, the premium was available at around 4 rupee 40 paise on 7th of May. So if you had bought one lot, we are talking about an investment of more than 24,000 rupees. And from there what happened is the price kept on increasing. It went up to a high of almost 20 rupees change, and on the expiry date it closed at around 18 rupees. We are talking about around 13 to 14 rupees, 14 points benefit in this particular trade. Roughly around 76,000 rupees profit is what one could have earned trading this ATM strike price, which means on the investment we are talking about close to 300% or more than 300% returns in this particular trade. Alright, ATM strike price gave you more benefit, is it not? But the same trade, if I had done it in OTM strike price, now here is the twist. Alright, now we went and looked at a OTM strike price, that is 150 strike price. Now price is trading at 142, 150 strike price is a proper OTM strike price. The premium was available at 1 rupee 85 paise on 7th of May. So if you had bought a single lot, we are talking about an investment of 10,175. Now why will I go for a OTM strike price, knowing as many people say that the premium is one way or the other going to become zero. Why do you want to go trade in OTM strike price? Well, ITM strike price, the investment was around 40,000 change. If I had that capital, it is fine. If I did not have the capital, then how will I trade in ITM? How will I trade in ATM if I don't have the right capital? Alright, then I have to go for, if the capital is small, then I have to go for OTM only. So with this 10,000 rupees investment in this particular trade, from there what happened is the price kept on increasing. It touched a high of almost 15 rupees 50 paise, the premium, and then finally on the expiry date it closed at 13 rupees change. We are talking about almost 11.4 points, 11 points benefit in this particular trade, roughly at around roughly around 62,000 rupees profit is what one could have gained in this particular trade on an investment of 10,000 rupees. We are talking about 600% returns in this particular trade. Alright, now your complete understanding, or what should I say, your traditional thought process about options trading or the different categories of these three strike prices that we spoke about, it is there is a change in opinion now, am I right? So OTM strike price gave you the highest percentage returns, ATM strike price was the second highest, and ITM strike price was the last. Alright, but all three of them gave us the profit. Now how is it possible? It is possible only when your trade is right, when you took the entry at the right point, and when you are holding on to the position until you find the right exit point. Alright, now this is where dynamic system comes into picture. It makes your job so very easy. It tells you which is the right entry, and it also makes you hold the position until it is the right time to exit. Alright, but then as I said, OTM strike price gave the highest percentage return, but then when you look at the amount of profit earned in this particular trade, ITM strike price gave us 86,000 profit, ATM strike price gave us 76,000 profit, and OTM strike price gave us 62,000 profit. So when you are looking at the amount of profit, then ITM strike price gives you the highest profit. ATM is the second highest, and OTM is the last one. Alright, so it all depends on your capital, what kind of capital you have. You should know, with the capital in hand, what kind of funds should I utilize on a given trade in options, because I always keep saying, if you want to see some money in this business, and if you want to stay for a long run in this business of stock market trading, you should know how to trade in a relaxed way and a effortless way. If that has to happen, you should know how to manage your funds. Alright, only then you will be able to trade without any fear, without any panic, stress, tension, confusion, absolutely nothing. Alright, so this is how, even in options, a single trade can change your complete trading journey. I hope today through this video, most of you must have got clarity, especially on options trading, and the fear about options trading must have got vanished by now after watching this video, isn't it? Namaste.